For high-income earners, today is the real tax day, since that's when extensions are due, and many haven't worked in their previous tax state for more than 1.5 years. Robert Frank joins us now with a look at some new data that shows how many high earners are using location apps to prove they no longer owe taxes to New York, New Jersey, and other high-tax states. Robert, the fight is on.
It is on, Andrew. Many taxpayers who have not commuted to work or even lived in a different state for over a year are now trying to change their tax residency. Look at location apps like Moneo. They track your movements for tax purposes. They have seen business more than double since last year. The main patterns, they say, are Northeast taxpayers moving to Florida and California taxpayers moving to Texas or Nevada. But the so-called 183-day rule that's being away for over a half a year does not exempt you from taxes. And state tax authorities, especially in New York, California, and New Jersey, are cracking down and flooding accountants already with audit letters. So there are two categories of taxpayers here. One is non-state residents who used to commute. If your former office is in, say, New York State, you still have to pay New York State taxes. Some states may even add on their own income taxes, so you're paying twice. Now, state residents who are trying to change their tax residency, that's the other category, say from New York to Florida, they have to prove a new domicile. That means severing all your ties with your former state, selling your house or your apartment, moving your dogs, your dentist, your kids' schools, your charities, your work to the new state. And by the way, if you try to skip out for a couple of years and then return, you will likely also get caught. New York has up to 3 years just to inform you of the audit. So that's 2024. So if you try to leave for tax year 2020 or 21 and then come back, they could come to you in 2024 and say, see, you didn't really move. You still owe those state taxes. Guys?
Robert, as you know, I'm rooting for the home team, which is New York in this instance. So, but my question to you actually is a conversation we have on this show. Becky and I often talk about it, how the IRS doesn't have enough money oftentimes to actually conduct these audits on the federal level. Do the states?
Well, when I asked the New York State Tax Authority, I talked to New Jersey, Connecticut, and California, they have increased their budget slightly. They're a little less transparent about just how many auditors they have. They say they're training people. A lot of this is automated so that if you change your tax residency and you make 6 figures or more, you automatically almost get an audit letter from the state tax authorities. Now, whether they have the manpower to then go and follow up, we're going to see in the next year or two.